Good morning, currency traders. Let's do some Forex. Let's do some gold. Let's do some oil. Trader psychology, fundamental analysis, technical analysis, Forex and you. Let's go. Forex.Today. Forex.Today. Forex. Forex.Today. 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 Still a little sick, huh? But that's all right. I'm here. Thank you for being in my life. Thank you for being part of this YouTube channel. Lots of stuff to go over today. Of course, tomorrow we got the FOMC thing going on, but there's also like every other central bank on the planet seems to want to do something this week. So that's pretty cool. So we'll try to deal with that. Today I think we should just stick with technicals and just go through the charts. Sorry, just trying to clear my throat. Let me clear my throat. Kick it over here, baby pop. So anyways, hey, my name is Wayne McDonald. Nice to meet you. I'm with Trader's Way. Yo, 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 throw your diamonds in the sky. You want an ECN account? For Trader's Way. You want a fixed spread account for scalping? Trader's Way. You want a variable account for just trading every day at low spreads? Forex.Today. UPay cards. I don't even know what a UPay card is, Eric. Eric B and LL, well, hell. Mr. Wayne, what do you think about tomorrow's pound CPI news? Couldn't care less. Okay? The reason for it, I mean, I'm being a little facetious, but like, dude, we're much more interested in Brexit than CPI. Like, what is the Bank of England going to do if CPI is crazy high or crazy low? There's nothing that's going to overshadow Brexit. So it's Brexit. So, dude, I don't know. Maybe it'll create some volatility, but where does the inflation come from if they do get inflation? Is it because the pound is low, or is it because economic activity is high? And it's really neither. The pound has rallied in the last few weeks, and I mean, where would it just come from? I mean, even think of it that way, right, Sky Killer? It's like, where would the inflation come from? And there wouldn't be any. So anyway, so the inflation would have to be lower, because especially if you're just counting the last month or so, CPI, there was a bit. So you have to look like, did the pound crash last month, or did it bounce and rally, or did it rally all month? And from that, you can guess on how that might impact inflation. Was it economic activity? Was it money supply increasing? Was it, and I think what you'll find is, honestly, it just won't matter that much. Okay. Supreme Court ruling revoking the parliament. Yeah, I mean, there's just much more going on in the world than British CPI. So anyways, cool. So namaste, guys. My name is Wayne McDonald. Nice to meet you. You're looking good today. Feeling good, Monte. So greetings to you. Yes. Get your learning on. So anyways, good to see you guys. We got cut short yesterday. I think I said something bad about Boris and Kathy, and YouTube pulled the plug. They're like, dude, don't go there. So I learned my lesson. Now what? Now I clicked a button and I'm not supposed to click that button. I clicked a button. I don't think I was supposed to click the button. Did I lose you guys? Guess I can't. There we go. This is what I want to do. Blue. This is all out of order, but anyways. Good, I'm still up. Gee whiz. Yeah, Lim, that means you don't have an active membership. So I think you've emailed me before. Email me again. I'm sorry. As you can hear, I'm still sick. Email me again. We'll figure it out. Okay. Eric B and LL. Well, hell, rock is for anthrax. All right. All right. So, anyways, let's move on.com. Brent and oil. WTI. Cool. Look how slow the world was for oil to go up. Pretty amazing, huh? Let's take a look on a smaller time frame. In fact, let's kind of clean this up a little bit. And let's just look at it weekly. Okay. Pretty amazing little bounce here. This obviously had to do with the news over the weekend, but notice how it still did weekly M2 as a bottom, which is just funny if you're setting up trades anyways. Now put it back to maybe just monthly. And what do you notice here? Okay, we had that crazy, what did I call it yesterday, geopolitical event. Okay, total chaos, right? But what do you notice here, guys? Sky Killer, my target is based on time, not price. What do you guys notice here? It's a question, by the way. What do you guys notice here? Done and dusted, yes, but we had this crazy, unexpected geopolitical risk that people will talk about for a long time. But what do you notice? It did exactly what it's supposed to do. Okay? If you're a bullish swing trader, okay, you have two entries, and this was your target. Okay? Now, the interesting thing is you would have been creating these plans like way back here. Okay? So it's not that it hit to take profit, really. It's that this was chaos, utter, total chaos. Okay? Also, isn't there something about the third week of August that I've been preparing you for? Or I guess we can call it this, but that's kind of the first week of August, so let's get rid of that. Okay? This is kind of the second week, so let's get rid of that. So the third week, let's do rectangle. Third week, what are we going to call it? The 21st, okay, something like that. So somewhere in there, this is the 21st. That's the third week of August. Somewhere in there, I've been preparing you for months and months and months and months, right? Have a bias. Get ready to trade it. It's coming. It's coming. Nothing on this chart says it's coming, but trust me, it's coming. Be prepared. Third week of August, start looking actively to get into setups. Okay? right? Then here's your very standard swing trade. There's your very standard follow-up swing trade. We are now done for the month, but you would have been planning for this in here. That was your plan. That's the part I hope you see. That this was accounted for. Now, yes, this was completely total chaos. A terrorist attack on global oil supplies. Absolutely 100% unpredictable. But that was your plan in the third week of August, if you were a bull. There's no other plan that you would have had if you know how to swing trade. That is the basis of all plans. Okay? So, once again, if you're missing these things, you don't know how to trade. And, you know, this is your wake-up call. What happens to FX if the United States attacks Iran? Risk off. Okay? It's a standard geopolitical move. Whenever there's a war, for example, risk off. Okay? That's it. War is not good for business per se. This is WTI. Okay? So this is your wake-up call, guys. Yes, this was completely unpredictable, but yet it was completely 100% predictable. There was no other trade plan that you would have had in the third week of August. I prepared you for months and months and months and months and months to be ready. Weeks and weeks and weeks and weeks. Days and days and days and days. Get ready for it. Get ready for it. I started putting trades on sort of in this area, right? And I said, look, I'm just acting on what we've been talking about. Remember? I'm like, I don't know if it's now, and I know I'm about a week early, but, you know, this is the time to start actually doing stuff. And in this case, well, look at that. Worked out. Great. Nice. Okay? So you need to train yourself to get away from the idea that Forex is random or markets are random. Yes, there are known unknowns. Like, I don't know what British CPI is going to be tomorrow. I don't. I don't know what the Fed's going to say tomorrow, but I know they're going to cut interest rates. Okay? So there's the known unknowns, and then there's the unknown unknowns, right? And so that was unknown, but isn't it just wonderful? Isn't it just wonderful that it did exactly what you would have planned? This one's to the penny. This one is straight off the, right, off the pivot. And then it's into the target. Notice, like, we're still stuck on the target. Now, can it go higher? Yeah, things have changed fundamentally. But technically, as someone said earlier, done and dusted. Right, Raymond? Done and dusted. That is a textbook swing trade, and yet I got you prepared weeks and months in advance to be ready for it. So congratulations if you got it, right? And if you think the markets are random to the point that you cannot plan, then you are not trading correctly. Yes, they are random, but if you cannot predict them, it's because your trading is also random. Okay? If your trading is random, meaning every day you apply a new strategy, and the market's random, which means the market can do whatever it does, there is no logical way that your randomness and the market's randomness will produce consistent results. And when you don't get consistent results, you say things like, it's impossible. No, what you're trying to do is impossible. So let's kind of use the scientific methodology differently and say, if the markets are random, but you're consistent, then maybe maybe you can produce consistent results. It just really comes down to the randomness of the market. How random is it, right? So anyways, I'm just throwing it out there that you should have, could have, been ready, and it worked out perfect. Okay, and by the way, we talked about when price was coming down and we got to this 50 area, I asked very, very, very specifically whether you were a bull or a bear. And everyone said bull. Nobody said this was going to 40. Nobody. Okay? Nobody said it was going to 40. And then here is the third week of August where I'm like, you got to get ready. Start getting ready. Trade your bias. Get your plan going. It's coming. It's coming. It's coming. It's coming. So as far as I'm concerned, every single one of you was bullish and had more than just an opportunity to make that money. So you either did your job or you didn't. Okay? That's all. And you might say, Wayne, I don't trade oil. I'm like, yeah, okay, great. But if you do trade oil and you missed it, you just simply didn't do your job. And that's a wake-up call. I'm not insulting you. It's a wake-up. It's a wake-up call. Okay? Look at this beautiful trading. Just beautiful trading. Just gorgeous trading. Wow. Amazing. Just amazing. We are blessed to have markets like this. Okay? Blessed. How do you add oil? You go like this. Okay? And it's WTI. Right there, Bubba. Okay, Sky Killer? It's right there. This is Brent. You can consider this sort of, sometimes I call it UK oil. Sometimes I call it international oil. And then, of course, this is West Texas Intermediate. Oh, then you need to open an account at Trader's Way, dude. Trader's Way. Okay. All right, so let's move on.com. All right, so where are we in these cycles? Well, remember going back a couple of weeks ago, I identified support and resistance. I don't know if this was this NFP I did this? Anyways, we're stuck on the R1, and we knew we'd be stuck on the R1. And I believe we had this as a dip and then a rally. Okay, and I was hoping we don't dip all the way back down to here. Okay, so that's sort of where we are now. We're still holding up okay on a weekly basis. Looks like we're breaching the 21, which means the 55 is in control. And that, if that's true, then I would expect some sort of dip and then some sort of rally. And then if I was trading technically, I would probably want to take profit there because having the 55 in control predicts a double top. Okay? And that's straight out of the book, man. That's right out of my book from a long time ago. Oh, yes. Thank you, Andrew. Yeah, thank you. Yes. You go like this. Show all. Okay. Andrew's right. Mr. Widow! Yeah, thank you. Can we look at Eurozar as well? Yeah, okay. ZAR's been kind of sideways for a bit, and Euro's been Euro, so, but, yeah. So anyways, yeah, this is sort of hanging in there, but stalling out, okay? But remember, my trade plan isn't to really get from M2 to M4. My trade plan is if we can breach this level of resistance, then I want to stay long until Thanksgiving. This is a time-based trade, okay? So what I'm hoping to see, I'm hoping I'm brave enough and strong enough to stay long okay, and maybe get to 80, okay? I think it would be great to get to 80, okay? I don't know, Grind, why don't you talk to support? I don't trade nat gas either, so I wasn't aware of a problem. Okay. So anyways, that's what I'm hoping for, guys. What up, JP? Okay, so anyways, that's what I'm hoping. What do we have here? Euro, yen. Whoop, up, 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 up. It's all over the place. Nice little swing here. Okay, this is both bulls and bears are on this. Okay, you can see the bulls are here and the bears shorted there. So who's going to win this? I really don't know because both sides are doing what they're supposed to be doing. Okay, I would have to assume this only because I'm bullish on all yen pairs. Okay, but you see how that folds in there? I don't care if you're a bull or a bear. You both should be profitable. Baby says, are you expecting big correction for Aussie pairs? No, I'm not. Nope. Doesn't mean it won't happen. Desmet Robin says, hey, Wayne, he's had a good month, hit all the targets early. How do you deal with boredom of not being in the market? Go spend your money. Volunteer at a museum. Spend your money and buy a computer rig and mess around with Windows for a week. That seems to work. Okay. But it's certainly not easy, right? It's all part of developing the discipline. Okay. Also, remind yourself, before you got to that point, you were losing money, right? So just remind yourself that it's not a burden to not trade. Yeah, like Joey says, you could have a different account just for scalping. That's for sure. You can drop into day trading, but remember all these different things. If the market is done, like your trade hit, like let's say like oil, what happens next is much less predictable with technical analysis because bulls are like, they're kind of done and bears are not confident and, you kind of get in this mediocrity. So what I tend to also do is look at next month's swing. So, what is it today? The 17th of September? It's not too early to start planning next month's trades. Okay? So remember, on August 15th, I went through with you guys planning September swing trades. How many people can confirm we did that? Okay? How many people can confirm that on the 15th of August, I showed you multiple trade plans, not only that I had created, but started to trade. They're September trade plans that I was already producing, but August 15th. So that's another thing you could be doing. If you've hit September's target, then start looking at October and tell yourself you might be a week or two early, but can you start tiptoeing into some of those positions? Are the prices right? Can you all that kind of stuff and start preparing, because maybe this week you're done and you skip all this. See, like this week is just cram packed with central bank stuff, right? Isn't it the Fed, the Bank of Canada, Reserve Bank of Australia, I think Bank of Japan, Bank of England. I like all these, like it's busy week. So maybe you're done and maybe you get your October trades going next week, right? and you just miss all the volatility this week. And sometimes that's a good thing, sometimes that's a bad thing, but I'm trying to teach you guys that reacting to short-term market conditions can be profitable, but it also, as you probably have found, can also be a level of risk that you might, on the long run, not really want. And I'm trying to teach you that most of these moves can be planned for, can be accounted for, you can have a strategy around and be ready, willing, and able to execute your strategy with patience. And that those kinds of trades can produce like many hundreds of pips, not just 20, 30 at a time, hundreds at a time. And that you can start stacking these trades, right? You see what I mean? So I'm not saying don't do short-term trading. I'm saying you certainly shouldn't make it the bulk of your trading, especially if you've found that your results are inconsistent. You don't want to, how do you say it politely? I don't think you can. You don't want to piss away your good month of swing trading on a bunch of central bank news releases and some volatility around it. Okay, you're supposed to be the calm one in a crazy emotional market, right? So, anyways, okay. So, like, let's take a look at maybe an example of that. I'd like to buy around 18. Okay, 1850 to 1750, so around 118. Okay, I don't know if I'll get an opportunity, but those are kind of prices that you'd want to look at. So I would start seriously looking at technical analysis on like weekly swings and daily. Okay, I would weekly trade and I would day trade starting around 19. So you've already kind of missed it, but I'm going through the logic here. 18, okay, and 1750, okay, which means 1850 is in play as well as a midpoint psych. So I would start kind of looking at this and say, okay, I got 19, 18.5, 18, 17.5. All of this kind of creates an area of opportunity, and what I sometimes call an AO. Okay? And then from that, you start looking at weekly and daily. So if I'm a bull, I'm buying dips. So on a weekly, is there support? On daily is support. Is there confluence between weekly and daily support in my AO? Okay, so we can kind of dive into this. And I'm messing with Euro. I don't really care about Euro, so that's why I'm kind of doing this. So, okay, so let's start playing around with some of this stuff. I think I have a different setup too that we can use. Let me turn that off. I think I have an all pivots on this one, don't I? All pivots. See? There we go. All right, so let's play with this. I'll zoom in a bit. All right, so to make it super confusing, I'm going to add more. I'm going to add more lines to this. So let's see if we can get some logic out of this. So 119. We'll add some logic. Okay. I know there's lots of lines. Struggle with it and see if you can handle it. 118.50000. Insert another one. 118.0000. And then I had 1750, didn't I? 117.50. All right. Let's see if we can turn some logic in here. I got a lot of lines here. I got monthlies, I got dailies, and I got weeklies, and then I got my zone. So I'm looking for, okay, I'm looking for somewhere around these levels of congruency. So let's kind of do it like this. Let's make this blue because there's no blue. All right. You see how, oh, that's supposed to be blue. Come on, Bubba. Come on, Bubba. Bubba. Come on, Bubba. There we go. Okay. You see how there's weekly, daily, and monthly support here? That's kind of interesting. How about daily, weekly, monthly here? Okay. Oh, all right. All right. Anything else? Weekly M1 in here. Weekly M1. So if it's a down week, maybe that turns into a play. So like let's talk about this. How would we get down to here? It would have to be a bearish week because that's a bearish target. Weekly M1. Where's weekly M3? Weekly S1. Weekly M3. Ooh. So someone sold here, up here, down here, up here, down here. Okay? Brings this into play. So this might be if the rest of the month is down. Between now and October 1st, if I get down to 1750, I might consider buying it. That would be a big risk off. Now, I'd be very concerned if that happened, but nonetheless, that might be support. Okay? 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 So the fundamentals that would create that would bother me. So let's say that ain't going to happen because fundamentally you don't believe it. Okay? So then you got to say, well, what would a bull want? Okay? Okay? So that kind of gets us into like a fib zone almost, right? You can almost say, well, why don't we look at this to this? Okay? And then say, what's a fib of that? Okay? So this would be the most ideal zone, right? So we're at 1922. We may have missed one already, so we have to pay attention to this, right? I want to make this blue. Okay, you see this? We have this big cluster, daily M2, monthly, weekly M2 is in there as well. So this could have been, should have been part of your trade planning process as a bull. And if that don't work, then you're thinking here. And if that doesn't work, way down here, but that won't happen for a while. So there's only really a couple of ways that this is going to work. Okay? Right? It's really plan A. Okay? Or it's going to do this. Here's your plan B. Down, up, down, up, down, up. Okay? So we'll label this B, and we'll put this back as A. So if you're a bull, those are the two most likely things. Okay? Well, Chuck Duck, that's already happened, and we haven't seen the end of the world, have we? What I was trying to say yesterday, before I was so rudely interrupted by YouTube, was it probably hurts China more than anybody. Probably hurts Japan more than anybody. But anyways. All right. So if you're a bull, I think it would come down to your plan A or your plan B, and you need to start tiptoeing that in. Okay. Now, one of the things you don't see on this chart, and I'm actually throwing it in from memory, But these are technically important for October, and we're only looking at September data. Okay. All right. So let's say this 18. See this area between 1880 and the pricing's messed up at 1863. So 1880 to 1863 is a pretty interesting level. Okay. Actually, I think 1800 is pretty amazing too. But let's keep this at 1750. And then change our point of view here, right? And look at my normal setup. And my normal setup tells me 1754, which is that lower line, and 1836. Now, do you remember? Was it sort of 1860 to 1880s and all that? And what you would be doing is you would assume here that this stays making a high, which would pull this up to this level. Am I going too far in advance? Let me attack this differently. I feel like I'm going over some people's heads. These pivots are fluid. High plus low plus close over 3. It's a weighted average. And they're variables until the market closes. Okay? This makes it variable. So we may not get another high. I don't think we're going to get a low. I mean, we might get a high and go up to here. So then the high happens. And then where it closes matters. So if it closes high, which in that case I would imagine, then the formula would tell you that a higher H would move this up, and a higher close would also move it up. Okay? So where would it move up to? And you would be thinking, well, higher than it is now, right? You don't know. I mean, you can do some of the calculations, but let's put it this way. We already know that first buy zone was 1836, which is about here, right? And we know if this continues to be bullish, and that would be part of your bias, you see? Like, you don't know if you're right, but if you're right, you know what's likely to happen as a consequence of your rightness. If you are that right, then what will happen to that bright orange or that bright pink line? Well, but between now and October 1st, it will go higher. And so how much higher? Well, a bit higher, not dramatically higher. So you might say if it's radically higher, so like we print a higher high, so we go all the way to the monthly M4, and it closes way up there, let's say at least around the monthly R1, then this is going to go up to about 19. But if it goes that high but then comes back down or whatever, doesn't close as high, then not quite there. And that's where you start getting this kind of stuff. And you're dynamically thinking because you understand how the indicators work. This is why you need to know how MACD works. This is why you need to know the math behind stochastics. So you're not looking at indicators. You can look at them, but you can also anticipate. And you can say, well, so my October trade plan, right, is my buy zone is here. And most people are not doing that level, right? So I hope that wasn't too esoteric. But that's how you think 2 weeks in advance, for example. And you can only assume the known knowns and the known unknowns, right? And the reason you use stops is for the unknown unknowns, especially black swan events, which, like a terrorist attack, could be considered a black swan event. Okay? Okay? Is that all right? Why don't you click the little likey button and I'll add up the likeys. And if there's not a lot of thumbs ups on this video, then it'll tell me that I went to too high level. And I'll dumb it down tomorrow. Okay? How do you know if your bias does not change by restate the question, Ollie. I think it's good. I'm losing it. How do you, if your bias does not change for October, then? Because that comes down. I think what you're asking is, how do you know not to change your bias? My bias is for years, certainly months. Okay, so I have a bias, right till the, and I've gone over this 1,000 times. So if you're newer, it's a great question, and I have no problem answering it again. But I clearly prepared people for my bias. I said what my bias was, and I said I would start trading around the 3rd week of August, and I would continue with that bias until the 3rd week of November. Okay? Sav says, so being a bear on yen. No, so you're missing the point, Sav, and that's, thank you for bringing that up. I don't know the future. Okay? So if you're bearish on euro yen, I have no problem with that. And I'm sure you can give me 3 reasons why you're a bear on it, and I would believe every single one of them. Okay? I think you have every right and every justification to say you're a bear on euro yen. In fact, I'm just using this as an example. I'm not actually bullish on euro yen, but I've already stated that many times as well. But let's just look at it. Okay, let's look at this question. I don't know what the market's going to be. I just know what my bias is. You don't know what the market is going to be. I hope you also have a bias. And I think if you completely disagree with me, if I'm a bull and you're a bear, I think we'll both make money. Now, one of us will likely make more money than the other, but that's not going to be your alpha per se. You could argue it was because you were so smart, but I think you got to get past that. I think it's not your alpha where you say, I believe I'm a bear, so boom, okay? And I don't think it's my alpha either, where I think I'm a bull, so that's my brilliance. No. I think you can randomly pick that. Okay? Your ability to make money isn't from being right. Let me say that again. Your ability to make money as a trader in the market, I don't care if it's wheat, soybean futures, nat gas, S&P 500, 10-year T-note, right? Or the euro yen. Your ability to make money as a retail trader, because if you don't have $100 billion, then you're a peon. So if you're a peon like me, then it's not your ability to be right that makes you money. You have to submit to that. And maybe it's a psychological thing. A lot of people don't. They just keep trying to outsmart the market. They're trying to be right all the time. And they're even trying to be like right today, and they're trying to be right tomorrow, and they're trying to be right the next day. And their opinions change. Like, it's absolute madness to think that your ability to make money is your ability to be right. And then to change your attitude every single day. Oh my God. It's okay. Here's how to make money as a small shop, whether you're trading your personal money or you have 50 clients with 10 grand each. It doesn't matter. It's such small money. Not your ability to be right. It's your ability to be consistent. Because when you're consistent, when the market conditions are favorable to that one thing, you will make money, or you simply don't know how to trade. If you don't know how to trade, you're screwed anyway, so it doesn't matter. So you should just stop trading money, throw it all into education, and just learn. Okay? But if you know how to trade, it's not that complicated, bro. Sell it resistance, buy it support, but do one of them, don't do both. Okay? So your ability to make money is just when the market happens to give you those particular conditions. Boom, you made money. Why? Because you were smart? No, because you were there. Okay? So I think if I were to group people randomly, and I don't know you, but you might, let's say, lose money because you don't have a strategy, right? But a lot of people have the right strategy. They still don't make money because they're not doing their job. They're not there when they're supposed to be there. You're not entering your trades, right? Like that oil thing. If you just did that, you would have made money. And if you were a bear, you wouldn't have made money. And that's the whole point. But if you don't trade, you're never going to do it. And then what happens is you miss so many trades, then you start throwing down some crappy trades because you feel like you're late. You know, the fear of missing out nonsense. Well, just do your job, bro. If you're a bear, wake up in the morning, look for reasons to sell. It's not that complicated. So you're making it complicated. So your ability to trade oil or 3-month treasuries or whatever, any asset class that you want. Okay. I'll say individual stocks, they're a little different. Real estate's a little different. But like an asset like you see a Trader's Way. Okay? Your ability to make money is through your consistency. Your one thing. So someone says, well, how do I know my bias is still a bull next month? Because you only do one thing. You only do one thing. And do it for the next 20 years. You'll do better than what you've been doing. Right? And then how about this? If you take my advice and you survive the next 5 years, you'll be a better trader in 5 years, and then maybe you adjust your bias more often. But how could you randomly throw down trades? And if you're not a very good trader, you have a random strategy with piss poor trading. Right? You have to be honest with yourself, right? So if you have no strategy and the trades you do take are piss poor, like poor entries, poor exits, you're sloppy here, sloppy there, like there's just no way you can be profitable. Okay? So the first step to becoming successful is developing a bias. The bias is your strategy. Are you a bull? Look at me. I'm a bull on all yen pairs for now. Some I like better than others, like Euro yen I don't like so much. But dude, if I focused all on yen pairs and all I did was look for opportunities to buy, I'll give you examples, right? There's no way I would miss buying here. That is a basic weekly swing. So I would not miss that. That's free money. Well, it's not free. I had to do my job. That's it. It's not free. It's just my job. There's no way I would miss that. Never in 1,000 years would I miss that if I know what I'm doing. I'm not random. I'm consistent. Therefore, when the market decides to giveth, the harvest is bountiful. Sometimes there's a drought. It's not my farming. I can't say, I'm such a bad farmer, Wayne, bad farmer. Like, whoa, dude, whoa. Let's slow down those horses, dude. It's the weather, right? It's the weather. So stop smashing your forehead into a brick wall. But maybe it is. Maybe it is you're a bad farmer. If you're trading poorly, like a farmer has to know how to grow things, right? And then the weather can screw up really good trade plans. In this case, harvesting, right? So start from scratch. If you don't know how to trade, you need to learn how to trade. I can't think of any example of you don't know how to do something, but you should be successful. No. So you're going to have to get some education somewhere. Okay? Come to these webinars every single day for the next 5 years. I'll teach you Or you can go to like fxbootcamp.com, put some money into the machine, and it spits out knowledge. Take 5 years, take 5 months. It's your choice. Sometimes you don't have a choice, but yeah, at least you got time. Cool. But you're going to need to know how to trade. And then once you have the basics, then the one thing you need after that is consistency. I don't care how you get it. I don't care what your bias is. You can completely 100% disagree with me. And if you passionately disagree with me, I think you'll be successful. The thing is, I'll understand what you're doing. I can look at your trading history and say, I know exactly what you're doing. Good job. I might hate what you're doing because it goes against my positions, but I should be able to look at your trading. Okay? And by the way, this almost never happens. But if you gave me your trade history, I should be able to read it like it's a story. And I can look at it and say, oh, here's what you are doing. You understand? I see what you're doing here. Oh, I get this. This is what you're doing. Now, if you're trading randomly, there's no way I could read it. It would be dissonance. Random dots on sheet music does not make music. Okay? Okay, you understand? So I want you to drive yourself towards that. Okay, flip a coin if you have to. And that's what you're going to do now. Okay? So I'd pick like $1. Like in my book, I say the greenback guru, the whole chapter on it. Great. So are you a bull on the US dollar or a bear? That's it. That's what you're going to do for the next 12 months. And if you can do that and you know how to trade, I would be surprised if you didn't make money. I'd be shocked. I'm like, wow, that's amazingly bad luck. But I don't believe it. I would find that unbelievable. If you know basic trading, technical analysis is not that complicated. You could master it in less than 2 years. It's not even really that important. It's helpful. Yes, it's helpful, but you can just get by with charts, I suppose. Okay? But, so I think you can learn that. So the rest is, will the market give you this year? Like, again, think of the farmer. Knows the time of year to plant, knows the right thing to plant, knows how to prepare the soil, knows how to actually put seeds into the soil, and then knows how to nurture them and take care of them. Do they need pesticides? If so, what kind of pesticides? And do they need fertilizer? And if so, what kind of fertilizer? And how much? And when do you put it? And when, and then the rest, though, is, are there going to be storms? What if there's a drought? All your seeds die. What if there's a flood? All your seeds die. What if your crop gets about 80% there, and then a tornado comes through, your plants die? Hailstorms, plants die. Doesn't mean you're a bad farmer. But the years that there's no flooding, the years that there's no drought, the years that there's no tornadoes, the years that there's no plague of locusts, you say, I'm the world's greatest farmer! And by the way, I grew up in farm country in Canada. I know farmers that own Caribbean islands. And you know what they're really good at doing besides growing things? They're really good at planning. They're really good at managing money. And they're fantastic futures traders. Yeah. Where's your Caribbean island? We all need a Caribbean island. Yeah, I got one. I don't own it. I want to, but anyways, that's what farmers do, right? So, anyways, I hope you take the message. I hope one of you. I have my doubts though. I hope at least one of you absorbed what I said and takes a look at yourself and makes a change. Right? I hope you do it. I hope you do it. I hope you do it. Okay, Eurodollar. Lots of people want to do Eurodollar. Let's do some Eurodollar. Yeah, I hope you do it. It's so funny though, like that most people don't, right? So after decades of doing it, it's just amazing that people just don't listen. I don't understand it. But anyways, I hope you do it. That's all I can say. I hope you do it. I think you just wait. If you actually did it, just wait to see what happens. All right. Is this bullish or bearish, guys? Grind's doing some Singapore dollar. Well, the problem with Singapore dollar is the secret basket of currency is highly pound weighted. So Grind trading pound versus Singapore dollar. That's interesting. I don't know if I'd want to, but I suppose I get it. Bearish, 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 ranging, ranging, bearish. All right, so nobody wants to buy it. Okay. You don't think it's going to bounce at 110, huh? All right, cool. Well, let's add some more data. First of all, price action is a leading indicator. Okay. So we got a high side. What do you want to call it? $1.15. Low side, 105. You're like, Wayne, that's like 500 pips below, 500 pips above. Yeah, but would you agree that that seems to be a range? Are you going to say there's one in the middle here? Suppose you could. So I said I was surprised that none of you guys thought 110 would be support, but let's check it out. 1.10. Okay, so let's mark that. Okay. Cool. Let's add some more tools, right? But you see how important that is? You know what? I want to go one more. I want to throw one more in there. This has got to be something in here, right? There's a lot kind of going on in here too, right? Huh, that's also 500 pips up. So let's talk about this. Is this something that you can note? 500 pips to 500 pips to 500 pips to 500 pips. Is it plausible that this pair moves in 500 pip increments? Okay, so just a thought process. This is pretty high up, but it seems like every 500 pips is an interesting spot. Okay, let's get more critical. Let's get critical, critical. I want to get critical. All right, what do we want to throw in here? Let's do some monthly. Shouldn't have done template. I don't know why I did that way. I just screwed up my analysis. All right, so we had 110. We also had, well, 110 is the closest one, right? Then 500 pips above, 500 pips below. Okay. Well, Chuck brings up a point. Like, I'm not saying the market's bullish. I'm just saying this would not be the best place to sell, would it? Okay. So where was a good place to sell? Let's go through this. M3 last month. Oops, let's do blue. And let's do a nice circle. Okay, this was a good place to sell. This was a good place to sell. Okay, this was a good place to sell. 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 Okay, help me with this. 1, 2, 3, 4, 5, 6 out of the last 8 months. 7 out of the last 8 months. What's the congruency here? What do these 7 out of 8 months have in common? These are monthly. Double top, no, M3. These are basic swing trade setups. That's it. If you know how to swing trade, that totally makes sense to you. Okay? That's it. If all you were was a swing trader and all you traded was Eurodollar, you've had a fabulous year. Okay? If you don't know what this means, join the swing trading group right now. swing.fxbootcamp.com. That's it. You didn't trade the Eurodollar short, but you're a bear. You missed every one of those for the whole, going back 8 months, really? The whole year. You didn't trade any of those? This is where you should just say, oh my gosh. Oh my gosh. Oh my gosh. I have to radically revolutionize the way I trade. Wayne is absolutely correct. That's what you need to say. You need to tell yourself out loud, I've been looking for a way to incrementally improve my trading by 5 or 10% a year, but what I've just learned is I have to radically revolutionize everything I do, because that is how I want to trade. Yeah, and once you know, you should stop everything. I don't know, I'm a very ridiculous person. I'm a very ridiculous person. I will just stop everything and master the one thing that I just was impressed on. But I've told you that's how I taught myself. I will trade a 1 minute chart for a year. I will spend weeks and weeks and months learning and mastering MACD and trying to figure out the logic behind the math. And then once I understand it, it's mine forever. That's how I work. I master things. I don't tinker. Now, Elisa does not work on yen pairs. I wasn't talking about yen pairs, right? So, yen pairs have different types of levels involved, and they have seasonality involved. The thing is, your planning should prepare you. Okay? So think of it this way. If you haven't had the year that you hoped for, and then I go over and I show you in just a matter of minutes, like, dude, there are very obvious, very basic setups on Eurodollar every month, month after month, worth hundreds of pips each. Hundreds! Right? Not like the group I'll keep unnamed, like the euro moves 70 pips today and we made 70 pips. Like, oh my God, seriously? The market moves month after month after month, hundreds and hundreds and hundreds of pips. Like, what happens over the course of 2 hours is really irrelevant. You understand? This is how the market moves. And from this, your other trade plans set up. If you don't know how to monthly swing, how could you have a weekly swing? If you don't know how to weekly swing, how could you possibly day trade? And if you don't know how to day trade, how do you possibly intraday trade with any consistency? And if you don't have consistency, how could you possibly have the results you're looking for? And if you don't have the results that you expect, how could you have any confidence in what you do? And the thing is, you probably don't. Do you see how it goes the other way? Right? Yeah, is that right, Ellie? It's the worst message that you could possibly receive. It's the worst message that you could possibly receive is some guy doing that, what you just talked about. Okay? So I hope some of you guys have an aha moment and say, oh my gosh, Becky, look. Right? It's Eurodollar, for crying out loud. It's 40% of the entire global market for money. It's trillions of dollars a day, and it sets up like that? Oh my gosh, right? So I hope you guys seriously have that aha moment. And I know only 2 or 3 of you will. And everyone else will just do, I don't know, whatever everyone else does. But I can't help the masses. The masses are going to love the 5 to 10 pip scalps. Look at me. I did it on my cell phone. I got enough for my yellow Lamborghini. Let's all go. Woohoo. That's going to work for most people. Okay? I made 50 pips trading the euro today on the news. Yeah, that's going to work. That's going to be the sales pitch for most people. And most people will buy that, and most people will stay poor. Because most people are poor, most people are uneducated, most people are lazy. Now, the interesting thing is if you get education and you're not lazy, you do not have to remain poor. You can be rich, lazy, and stupid, and you'll end up being poor. You'll waste granddaddy's money. Okay? And by the way, I live in the southern part of the United States. There's a lot of that here. There's a lot of granddaddy's money, right? So I know that can happen too. I see it around me all the time. So if you have half a brain and a kick-ass work ethic, you will not have money problems. You understand that? If you have half a brain and a kick-ass, ridiculous, sickening work ethic, you will not have money problems. Now, it'll take time, but those problems will go away. And wait till you run into your real problems. Money is not a real problem. Money is a symptom of the environment that you were put in. And the thing is, you are not in control of where you were born, what time you were born, who your mommy and daddy was, what neighborhood you're in, what community you're in, what culture you're in, what country you're in, none of this. You were not in control of anything, so it's not your fault. It's what you do next that you're in control of. And let me tell you, the money problems, they're one of the simplest things to fix. Then you'll find out life has some serious problems. And if you got some money, at least you can say, well, I can help. I have some money, I can help. The best thing about money is you're like, I care about that. I can help. You can't fix things often, but money can help. It's very useful. Oh, you need something? Oh, well, here's something. Right? Money helps. Helps, right? Make money and contribute if that's how you want to do it. But you need half a brain, which means you need education. Look, I'm still at Harvard. Okay? Dude, you couldn't imagine the stuff I'm doing right now. It's wonky. But anyways, invest into here. And if you have that ridiculous, sickening work ethic, you'll have problems, my friend. You'll have problems through the rest of your life till the day you die. You'll have problems, but it won't be money. Okay? So that's the message to the 2 or 3 people that are actually listening and writing it down and saying, you know what, he's right. I'm going to revolutionize everything. Okay? Most people won't do anything. Yeah, e-money Forex is honestly 55% winner. Yeah, that's fine. So like, again, it's simple math, but most people don't do the math, right? Let's do the math. Oh, I hate math. Yeah, that's fine. But you have, let's say a 25 pip stop, 50 pip target. Stop, target. Okay? You can lose. You can have a loss rate of 66% and not lose money. So like e-money Forex is honestly a 55% win rate is pretty good. Yeah, if you do that, you'll be very profitable. Right? Let's redo this. If your loss rate now is 45%, you are on your way to being filthy, stinking rich. Okay? The variable, there's 2 variables now that matter. How much money does your account start with? Okay? The other variable is time. And the math just takes care of itself. You can, there's input and then there's output. Okay? So if you lose 45% of the time, depending on how much you start with and how much time you do it, you will become filthy, stinking rich. It might take you 1,000 years, probably not, right? But if you have $100 in your account, you're right, it will take you 1,000 years. So I would recommend you get a job and you sell things and all that kind of stuff, right? The says it's the mindset. Of course it's the mindset. But your mind is the most powerful thing in the universe. You can actually twist and reshape the fabric of space-time with your brain. And when you attempt to do something like that, and you get an MRI of your brain actually shifts and reshapes itself as it reprograms, actually rewires itself. It physically changes. Okay? Pure mathematics is what can I do if I'm a student? There are 2 variables. How much money you have, how much time. So what if you have a student? I guess what you mean is you don't have any money. Well, you got lots of time. Okay? Okay? So I've done this for a couple of dozen people now. They put $5,000 into a trading account. I get them another 20. So they start with $25,000. When you do the math, 100% a year, $50,000. 100% in the second year, $100,000. 100% in the third year, $200,000. What if you only start with $5,000? At the end of 1 year is 10. At the end of the second year is 20. At the end of the third year is 40. So if you start with $5K and you never spend a penny and you just do 5% a month, at the end of 3 years, you have $40,000. If you start with more money at the end of the 4 year, on the 4th year, you don't have $40,000, you have $200,000. What was the difference? You started 25K instead of 5K. That's why I do it. And then once you got your 200,000, could I have the 20 grand back? Okay? Yeah, so Burl says I started 3,000 and made 12,300 in a week. That's terrible, Burl. So you're misinterpreting what I'm saying, Burl. That is absolutely horrific. Okay? I'm asking you to think professionally, to have low risk and consistent returns over long periods of time. Okay? So Burl, if you still have the 12,300, stop trading like that immediately. Okay? Just stop. Just please listen. Just stop. And then give me time to work with you. Drop into a mini lot. Okay? I'm not joking. Drop into a mini lot and give me some time. You and I can work together over the course of time, and I will help you reduce your risk. Okay? I hope you listen to me. I have a feeling you're going to reject it immediately, but I can't do anything about that. Okay? So I'm pleading with you. Please stop trading like that. Please stop. Drop to a mini lot today, and let's work together. Okay? Especially if you want to trade as a professional, Burl, like if you ever want to trade other people's money, you have to listen to me. Someone would run from that. That is so bad. I'm trying to save your career. Okay? So hopefully you don't refute it and reject it. All right, cool. Yeah, so anyways, we're at this 110 level. Okay? Someone's going to see it as support. There may be an opportunity here. Okay? You're like, what kind of opportunities? Well, let's kind of look at it this way. Okay? You ready for this? So this is still Eurodollar monthly charts. You ready? What if you were a bull that whole time? You ready? This is a bullish setup. This is a bullish setup. No. That's M3, right? That's a bullish setup. These are a little tougher. You would have tried here. We're talking about, it was up 200 pips here. This one's up 400. This one's up 400. This is obviously a trade. Again, that's 118 to, no, 111.80. So 112 to, a couple hundred pips each, guys. These are all a couple hundred pips each as a bull now. Okay? As a bull, going the wrong way. Applying a consistent strategy in an inconsistent market. Well, pre-annual legacy, that's good, because if you have money, then we can do some fun things down the road. Okay? Yes. Zhao Han Chen says, I have 401. Will this be better for me? If you want, I think the six, right? Remember, the two variables, how much money you start with, how much time. I didn't say how much leverage. Leverage is, by and large, not a good thing. It's a necessary part of business. Even businesses leverage. And there are ratios you look at, okay? The debt to equity ratio, for example, okay? How much leverage does a business have? You should have some leverage, and leverage will increase your results, right? The ratios, right? Remember how I was showing you, like how about this? Oops, I didn't want to do that either. All right, so I'm up 400% in swap only, and 1,200% for a total of 1,600% on one trade. I'm up 1,600% on one trade in like 4.5 months. I've been in that trade for 4.5, maybe 5 months. Since the beginning of May. Well, that's thank you to leverage. Okay? That's leverage. It's kind of ridiculous. Okay? It's quite ridiculous. Right? But that is leverage. 300% in just interest payments. Okay? What you want to do is you want to tone leverage down. There can be too much debt to equity. How about this? Would a bank lend you $1 million to buy a house if you make $3,000 a month? It's $1 million house. Will they lend you the money? You make $3,000 a month. You make $36,000 a year. There's no way. Debt to income is too low. Okay? So let me go back so I'm clear. The two things that are important, let's go even further back. If you have half a brain and a ridiculous, sickening work ethic, your money problems will go away. Okay? Done. Now, there are two things that impact when they go away. How much money you start with and how long you trade. Okay? I didn't say if you have $1,000, that's it. So you should start with a 500 to 1 leverage. No. I said how much money you start with. You can have 20 to 1 leverage and you'll be just fine. Okay? In the United States, it's 40 to 1, I think, or 50 to 1. In Europe, it's 40 to 1. That's enough. So if you have 100 to 1, that's more than enough leverage. 400 to 1, you're not getting my point. My point is you need to start with money. Okay? So if you only have $1,000, work 3 jobs and sell every asset that you have and cut every expense you have. Did I mention a ridiculous, sickening work ethic? You need to be ridiculous. I'm a very ridiculous person. I am a very abnormal person. So I will do stuff like that. I will do whatever it takes. Okay? So if you have no money and high leverage, you will fail. You have to have money and time. If you have lots of money, but you're 98 years old, you probably don't have a 20-year business plan, right? So you need time and you need money, okay? And don't worry about it. Forex ain't going away. I've been doing this a long time. It's only better now than it has ever been. So if you need to take 2 years off to work 2 or 3 jobs and save all your money, then I think you should do it. Why? Because you have created, maybe you haven't, but let me sort of foreshadow this. You should have a 5-year business plan. And part of your business plan is you're going to do whatever you can to learn the next 2 years and save money for the next 2 years. You're going to trade a demo account, you're going to come to my webinars, and you're going to work 2 or 3 jobs. And you're going to save every penny. And all of that goes in to your bank account. So that in 2022, you will be bankrolled and you'll be a kick-butt trader by then because you're doing these webinars every day. Maybe you join them, do the training courses. Maybe you join one of my groups too. And you're really learning, you're learning. And when you finally bankrolled, you're a kick-ass trader. That sounds like a winner to me. I would bet on that person's success any day of the week. But that is not get rich quick, and that is not get rich easy, right? Think about it. I want to EA trade for me all day and all night and make money for me while I sleep or while I lay on the beach, or as I drive my yellow Lamborghini, my robot's going to make me money 24 hours a day while I do nothing. You're like, dude, are you delusional? Is that honestly what you believe is reality? Oh my gosh, I can't fix that. You don't even want to do the work? You're not going to be successful, bro. You want to do ridiculous amounts of work and you got half a brain, you're going to be fine. It's going to work out. Don't worry about it. It's going to be work. It'll work out. And if you make mistakes, you have a half a brain. You'll learn from them. But it's your ridiculous, sickening work ethic that's going to get you across the line. Okay? But if you're looking for the easy way, you're going to fail. You're looking for the quick way, you're going to fail. You're trying to do it with no money and jack up leverage, you're going to fail. But that's common sense. I know you know. I know you know. I know that you know that I know that you know. That's common sense. It's common sense that quick and easy is for fools. Okay? But the logic also makes sense to you, right? Money, time. You can't be stupid. You have to have a work ethic, right? And the math has to make sense. If your stops are half the size of your winners and you're a 50-50 win rate, you will be profitable. It's just a matter of time now. Now it's just time. Now you can create budgets and cash flow statements based on that. But what if you're only making 20 pips at a time? And 5 pips and 12 pips? Do you understand, like, mathematically you cannot win? Yeah, Jonty says 21, but there's also a thing called being under leverage. You're not deploying your capital in the most efficient and effective way. So, yeah, it's enough. I agree. It's totally enough. But you want to make sure you're using what you can as well. But yeah, honestly, that's enough. Yeah. Okay. Okay. Boom, boom, up there, down there. So you see the weekly plan? Now the bears, they're thinking this. Okay. So which one are you? Well, Michael says, and lot size. Well, that's really what leverage is. So you can have 1,000-to-1 leverage. It doesn't really matter. It's all about lot size. But it's the fact that the broker will let you make a lot size that you can't afford based on your leverage. Okay? Okay? But really, you don't need leverage. If you know how to trade, you don't need any leverage. Okay, let's say I have no leverage. None. But I am swing trading. So let's look at this. I gotta close this. Let's look at this now. Okay. Okay, I have no leverage. Okay. $10,000, $10,000, $10,000. There's $37,000 in the account. I have 30,000 invested. I'm maximum deploy, right? Okay. I have a floating profit of about 7%. for the, just floating, whatever, 2,100 of 37, so maybe 6%. Cool. Now, the interesting thing is, because I'm mark to market, okay, if I was in stock positions, if I owned shares of companies, I can't spend this. I'm just out of 30,000. Okay? So what that would mean is my capital is fully deployed. If you ever listen to professional stock traders, they'll tell you that, well, we're fully deployed on this, right? And we might move to cash on that. Well, Forex is different. We're mark to market. I already have the profit in the account. I'm already in cash. So in this example, I can continue trading. Do you understand I cannot lose money? I still have my full $30,000 available to me. Actually, I have 37,000. Okay? I started with 35, now I have 37. I can actually continue to make trading. I have no leverage. I have zero leverage. Okay? You see what I mean? Now, I got to be careful because I can only trade three trades at a time, and I'll be fully capitalized. 10, 20, 30, 30,000 of 35,000 is put in the market, right? I only have $5,000 left. But look how hard it would be for me to lose $5,000 on 3 trades. It would take, I'd have to lose thousands and thousands. I'd have to lose 5,000 pips. That's pretty hard to lose 5,000 pips, right? But I'm not leveraged, right? So now let's say I use some leverage, 10 to 1. Well, instead of 3 trades, I can have 30 trades. Is that enough? Is 30 trades enough? Yeah, that's enough. Okay. Yeah, but the math is all the same, right? But here's the thing. Some of you guys that have $10,000, you're trading like big lot sizes. You're trading full standard lots and stuff. And I'm like, oh my God, but you're dead broke. How could you possibly trade that, right? I don't know if that's a week's worth of salary or a month's worth of salary or what, but I don't know what 10 grand means to you. But holy smokes, you're probably crazy leveraged. But now, if you had $10,000, that's where a little bit of leverage comes in. So let's say now I'm leveraged 10 to 1, not 100 to 1, 10 to 1. Okay? I can have 3, 4, 5, 6, 7 of these trades open and not stretch my leverage right? And now it'd be up 20% for the year. I have 5 or 6 trades open. They're all winners, of course. Why would you have losers, right? And you'd be all right. As a percentage, that's why leverage is good. Now it'd be up $2,000 on a $10,000 account. That's really good, right? Now, what if you're leveraged 50 to 1? That means you have $2,000 in your account and you're up 100% for the year. Well, 100% a year, right? Or let's say 100% floating profit. That might be a bit much, right? Remember, the stock market, it's trying to make 10% a year. The epic year is 20. So how could you be up 100%? Well, leverage, of course. So this is where, when you become a professional, and going back to the person that posted that they made all that money very quickly, any professional is going to do risk-adjusted performance. And they're going to say, well, if you cut your leverage in by 80%, right? Let's say they can very quickly find out that their maximum tolerance is having you leverage at 20%, at 20 to 1. and you're leveraged at 200 to 1, they're like, no, we can't do that. Okay? Most professionals will have mandates. They'll say, no, the maximum leverage we can accept would be 40%, right? You can't be leveraged more than the futures market, like, or 50%, let's say, of 50 to 1, and you're leveraged to 100 to 1. They're like, we can't invest in you. You'd have to cut your leverage in half. You should be okay with that because I'm not using any leverage. If you look at it, I have all my cash available. I have 100% availability. There's no leverage per se. Okay. So if I wanted to put a $3 million trade down, I'm going to have to use leverage because I only have 37,000 in this account. 10 to 1 gets me, right, 370. 100 to 1 gets me 3.7 million. So if I was going to drop $1 million on this or $2 million, I'm going to need leverage. But can you agree that with $37,000, I probably should not have a $1 or $2 million trade, one position, right? Like, should I just, you understand that I shouldn't do 20 standard lots? I could probably squeeze it out, or even 10 standard lots. Right? I have the leverage to do it. But I shouldn't be trading $1 million with 37,000 in my account. I could, but that would not be cool. That would not be logical, okay? Now, with smaller trades, I can make many more trades than just one giant trade. And every of the smaller trade, I can move the break even and add another one. Move that to break even, move another one, put that to break even, and another one, and another one, and another one, and another one. And effectively, as I get knocked out of my losers and I keep all my winners, my leverage ends up being zero. Because I'll have nothing but winners and no losers. And all my losers were small, and all my winners are way bigger than the risk I took. You understand? So now I'm not really using the leverage. I'm taking advantage of it, but I'm not really using it. I'm not ever over leveraged, right? And the risk that I take per trade relative to my account size is minuscule. So now the account grows, right? And now I can plan, which means time, right? So, and these are just fun trades that you and I did together, right? Right? You should, at this point, remember I told you in August, your trading goal should be to get 20 or 30 open positions. How many people remember that? I spent most of August, when nothing was happening, teaching you to be prepared for these moves, and you're going to take 1 or 2 or 3 trades a day, and if you're a bull, you're going to buy at support, and then you're going to move your stop, and then the next day, you're going to do 1 or 2 or 3 more, and then move your stop, and then the next day, 1 or 2 more, and 1 or 2 more, and 1 or 2 or 3 more, and some of them are going to get knocked out on pullbacks. That's okay, but every single day, you're going to do 2 more, and every week, you're going to have 2 or 3 trades open, and as time goes by, you'll have 3 or 4 trades open, 4 or 5 trades open, 6 or 7 or 8 or 9 trades open, and by the end of the year, you'll have 20 trades open, thousands, tens of thousands of pips, and you'll be super successful. Or, and I said this back then, you'll completely ignore me and you'll regret it and you'll throw away the whole year. And you'll just keep shooting at rabbits. Rabbit stew every single day, but you'll never get filthy stinking rich. You'll just slowly starve to death. Okay? And these are just examples of me like, get ready. Here it comes. Look, guys, 3rd week of August. Uh-huh. 3rd week of August. Uh-huh. I know, right? So this isn't my trading account. This is my coaching account. So I prepared you for weeks and weeks and weeks, months and months and months to buy the yen pairs at support in the third week of August. Cool. I'm up over 500 pips. Imagine you had 5 or 6 or 7 or 8 or 9 or 10 trades. If you had 10 trades open, you'd have closer to 5,000 pips. Yeah, but it's been 3 weeks. If you have prepared and been rock solid and been ready, willing, and able on daily pivots, on weekly pivots, on monthly pivots, you should be up thousands and thousands of pips. Or you still do what you used to do and you know, whatever that is. But you can't blame me. I prepared you. I begged you in some cases and asked you to do business plans and go on business planning retreats. I actually asked you to sit down and meditate over weekends of how you're going to put this together. I think vision boards were even brought up in one conversation. Like, oh my God, right? Like, what more? I created a swing trading group so you can be ready and get in on these things. And like, I'm doing the best I possibly can to push and pull and prod and hug and slap and wake you up. Pull the cord out of the back of your skull and bring you out of the matrix. I'm trying, guys. Trying. I'm going to keep trying. So thank you for being on my team. I hope it helps. I hope it brings you success. So make sure you got education and a ridiculous, sickening work ethic. And I know some of you have heard this multiple times before. Some of you guys might be having an aha moment. But I hope you wake up, man. It's time to see reality. And I hope you fight for it. I hope you say, I need to revolutionize everything I do in regards to trading. I hope when I showed you the month, you know, the sell, 7 out of the last 8 months had tradable monthly swings. So I want you to say, oh my gosh, I don't need a better stochastics. I don't need a better MACD. I don't need CCI. I don't need harmonics. I don't need butterfly patterns. I don't need bat patterns. I don't need Elliott wave. They're all fine. I have nothing against them. But if you're missing that, oh my gosh, then it's wake up time. Revolutionize. Get all that. This is how the market works. Once you have the market works, you want to use bat patterns, great. Use bat patterns. Harmonic yourself to death. Whatever, man. You like CCI, I like MACD, we can be friends. Okay? You're like, Wayne, I hate all these lines on the charts. I need to simplify. All right? If you can do this, we can be friends. Okay. Well, that was way zoomed up, but okay. We can be friends. Okay. Because we know price action, this is support, and we know pivots, this is support. So if you're a bull, you would buy that all day, every day with ease. But if you're not doing that, it's because you're not a bull. That's your problem. You weren't a bull yesterday. You weren't a bull last week. You are not going to be a bull tomorrow. That's your problem. And I can fix you if you let me. But you got to have a half a brain, and you have to have a ridiculous, sickening work ethic. I can't. And if you don't have a brain and you're lazy, I can't do anything for you. Okay? I can't help stupid, lazy people. I don't want to help stupid, lazy people. I don't care. I have no empathy. I don't have empathy. I'm sorry. I don't have empathy. I certainly don't have empathy for stupid, lazy people. They make me laugh, and I feel very sad at times because most people are stupid and lazy. That's the saddest part. Walking through society, isn't it? That's why I'm so appreciative to have you guys in my life. Because I walk through society, I'm like, stupid, lazy, stupid and lazy, stupid, lazy, probably stupid, lazy. And I walk through society, I'm like, I don't get these people. I don't get them. I don't like them. I'm not happy. I don't care how old you are. I don't care what race you are. I don't care what religion you are. Doesn't matter to me. I like smart, ridiculous people. It's kind of like why I like Harvard. I'm actually getting depressed that it's going to be over soon. I wish it wasn't so hard. I wish Harvard was easy because I like hanging out with really smart, hardworking people. So there's like, I have that. I have my wife and kids, brilliant people. And I have you in my life. So thank you. Thank you for being smart. I mean, you want to sit and talk macroeconomics with me. I thank you so much. I thank you so much. Like when I go to parties, I don't get to talk about the Bank of England. Oh, Carney, you should have seen Carney. They're like, who's Carney? Bank of England. What's the Bank of England? When I say BOE, people think Board of Education. They want to talk about the schools in our county. I'm like, why? 90% of people are either stupid or they're lazy. Like, I don't care. There's my empathy problem, right? Like, I don't get to hang with awesome people like you outside of these webinars. Isn't that amazing? Well, then I have my other groups like the swing trading group and stuff, but like us as currency traders, there's no one else so cool in my life than you guys. So it's a blessing, right? It's a blessing. I care about central banking policy. I care about macroeconomics. I care about working hard to improve and strive and to grow and to be inquisitive. And like, where else do we get this? Like, thank you so much for being in my life. Thank you. I will see you tomorrow.